Good morning, everyone. We are gathering and have quite a few people joining us today, and we will be starting in 2 to 3 minutes. Thank you. All right, just wanted to give everybody a heads up. If you would like to place any questions in our Q&A that you will find either at the top or the side of your screen in your Zoom, then you can start asking any questions and we will answer those as appropriate. Thanks. All right, here we go. It is 10 a.m. And we wanted to welcome all of you to the Lang Management Town Hall number 2. This is the second in our series, What's Impacting Your Association Now, hosted by Lang Property Management. And I wanted to introduce the host of today's meeting, who is Kevin Carroll, who's the president of Lang Management and the CEO. And Kevin, I think that you are going to help us introduce our panelists today, right?
Yes, I am. And good morning and welcome everybody to our town hall. If you were able to join us for our last webinar on the 5 top things impacting your association, you were able to see how the pandemic, our economy, and your questions have been foremost on our minds. Our webinar today will address many of these same aspects of the COVID-19 pandemic that we have been experiencing from a legal and insurance perspective for nearly, or more actually at this point, than 8 months. From new exposures such as the continuing effects of the COVID-19 and other potential pandemics in the future, to the continuing challenges and with weather and other natural catastrophes, social inflation, and having to hit the economic pause button, today's risk factors are driving insurance premiums and the legal responses needed in order to pivot, adapt, and respond. Our panelists today will continue this discussion by responding to questions that they have been asked by many clients, and there will be time for Q&A. So as Paige said, if you have any questions, just hit the Q&A button on the bottom or the right of your screen. We will address them as we progress through this webinar. And again, I'm pleased to welcome you all today and hope that we can all learn a little bit more as we make our way and muddle our way through all these experiences that we've been having. So it's my pleasure today to welcome to our panel Keith Backer, Esquire, a lawyer in Boca Raton for a number of years. He's a founding member of the Backer Abdul Polikoff and Foster Law Firm, and also Brandon Lynch, president of Plasters Insurance Agency, an insurance agency that has been in the South Florida market for decades and specializing in association insurance requirements, just as Keith's firm specializes in association law. So with that, let's get on with the seminar. So the biggest question is, how is this pandemic affecting our association now? And I think when we look at it, we're really talking about the issues that have been facing us all over these months. And I think the first areas that we want to get into is some open forum questions, which again, we welcome any responses to. And Keith, let me have you take the first areas here, some of these questions regarding offices in the future, as what things are going to look like.
Sure. Well, I mean, certainly, I don't know that we're going to see a lot more remote working. We're seeing it a lot now, and I think that we're finding that people who didn't think they could work remotely are able to work remotely. So we're going to see a lot more people in the communities. There's going to be more people staying home. There's not going to be as much dead space during the afternoons in those communities where you have a working population. So there's probably going to be more people at the pool. There's going to be people working in the clubhouse or wanting to. And generally, I think you're going to see more of your population staying in the community during the days. It's going to have some effect on traffic and everything else in the community, since some places are accustomed to having it rather quiet during the days. One of the questions on here is, what do we need to know about the legality of saying no to a request to return to the office? If someone is COVID positive and they are at home or quarantining, or if there's somebody in their home who is quarantining, it is entirely within the law for an employer to ask that individual provide a confirmation that they have tested COVID negative before allowing them to come back to work. I mean, most of the insurance aspects I'll leave to Brendan, but I think that one of the things that I think we're going to get into today, and I'm going to make this comment and perhaps encourage some questions about this, that most community associations insurance policies do not protect the association in the event that they're sued because someone contracts a disease at the community. So what that does, that impacts how an association responds to the governor's phase 3 program. While clubhouses and facilities and communities are able to be open under the phase 3, some communities are considering whether or not they want to be open, to what extent they're going to be open, and can they control crowds in their clubhouse. And if the answer is no to any of those, then you have to consider that if someone does get sick because the association wasn't enforcing social distancing, that there weren't any precautions, that there weren't proper cleaning protocols in place, if the association does get sued, it probably will not have insurance coverage from its carrier. And it probably won't even have a defense, meaning the insurance company won't pay for their attorney. So, and anybody who's been in litigation knows that the potential for a judgment against you is often not the biggest fear. The biggest fear are those monthly attorney's fee bills that you're going to have to pay while the case is litigated. That can be sometimes more of an impact on a community than the potential for a judgment.
I can sort of add some comments there. First, just in regards to working remote, we have 4 offices in South Florida with, and at this point we have about 100 employees working from home. So we were fortunate that we already had the ability for people to work from home, and we had made that available to several people, and we even have people that work outside of Florida. So as far as our company, that was not a difficult thing for us to transition. In terms of your insurance, if your policy doesn't presently have an exclusion for communicable disease, then it definitely will at renewal. But I would say there's a 99% chance that you have an exclusion for it in your current policy. just based on the companies that are prevalent in our area and being very familiar with their coverage forms. And Keith is exactly right that those policies would not respond. In fact, the challenge is that they won't respond. It's likely they won't respond to a scenario that really doesn't even involve somebody suing after contracting the virus. It could be somebody suing because they couldn't use the pool, and the reason the pool's closed is because of the probability, or the board decided to close it because of the risk. So that's a big problem. I have not seen a single claim from anyone saying that they contracted this virus at one of our clients' facilities or amenities. I've seen no such claim. I really haven't even seen a claim that somebody was suing for not being able to use the amenities, but I just wanted everybody to know that the insurance company will likely connect the two, and that exclusion would probably apply.
And I think it's changed a lot in many ways as far as employees being able to, such as yourselves, work from a remote location. Obviously, it's different in some cases for other types of employees, and it's certainly challenging as well. There's issues regarding childcare. Now schools have been opening, but we all see what's happening there. I think there's a lot yet to be seen as to where we go from here as we unravel this mess a little bit more, hopefully. But there will continue to be challenges in what employees will be able to work from distances and what you can't. And the good news, though, is that those of you and those of us that are in some ways working remotely, it's all working out technologically and working out fine for everyone. So that's a good thing.
So, I mean, I can take a couple of these questions here on the open forum here. Because this segues a little bit into what I just said. The governor's phase 3 order allows clubhouses and pools at community associations to be open. There are some limitations, and the governor's order and the various counties that have kind of supplemented the order have reiterated that social distancing is necessary, that cleanliness standards are still in place, meaning there has to be frequent cleaning of the facilities. And the question really becomes to some communities when they ask, well, can we open our clubhouse or not? Well, the answer is that you may. There isn't a law now that is preventing you from doing so. But the question is, should you? And that depends in large part about the nature of your community. If your community is a primarily retirement community with a large population of elderly people with conditions that might make them more susceptible to serious illness if they were to catch the COVID-19 virus, then that community might want to consider a much more limited approach to opening its clubhouses. If, on the other hand, you have a more family-oriented community, you may feel that you can be a little more liberal. I do agree that, with Brendan, that we haven't seen any lawsuits yet about someone actually contracting the virus. And the reason for that is, I think, primarily because it's difficult to establish causation. We have a pandemic, the virus is everywhere. So you could just as easily have caught the virus from someone that you were standing next to in Publix or any other place you might have gone, just as much as you might have caught it in the clubhouse. So it's hard for people to actually establish that where they caught the virus. Now, if an association is having events, if they're having an event where there is a large group of people gathering, where there is no effort at all to maintain social distancing or to require masks, then an association may become a target if somebody attends that event where the association did nothing to prevent the spread of the virus. So it really would, whether you should or shouldn't open your clubhouse and how far you go in opening it and whether you have limited hours or not, all depends on the nature of your population and also the nature of your clubhouse. Is it big enough for you to have a spacing for people to be able to use the facilities without being too close to each other? why should we pay for clubhouse expenses when we can't use them? This is one of my favorites. Um, because you own it and because it needs to be maintained, whether you're using it or not. I'm sure that everybody has things in their home that they don't use, but they still pay for them. You're still paying for everything, whether you use it or not. And the fact that your clubhouse can't be used might actually save your association some money, so you may have a surplus at the end of the year if in fact they didn't have to clean it or do as much custodial work during the course of the last number of months. But the clubhouse is a facility that is paid for by your assessments. Community associations have no other means of raising money other than the assessments, and the courts have held that and both the Condominium Act and the HOA Act provide that if you don't use your facilities, that doesn't excuse you from paying the obligations to operate them. And the courts have held that association, it's something that is either not being used or something that is in poor condition and not being maintained, is not a reason for not paying your assessments. So,
and I might add to that obviously a number of the expenses to upkeep a clubhouse, whether or not residents are allowed in it, are basically fixed expenses or certainly variable expenses. You have insurance costs that must continue on. You're going to have utility bills. Some may be lower, but it's just still must be air conditioned and heated, or in our case, air conditioned. And there's several other expenses that we could cite. And as pointed out here by Keith, at least in this manner, you'll have some surpluses from some of these areas where you may need that budgetary money in the following year. Heaven forbid this virus continues and you need to have more expenses that may or may not be budgeted. Let's say they're not, for more sanitation or other items that we just are not able to anticipate today.
I've had some clients tell me that even though the clubhouse is closed, they've tried to operate the pool. And to operate the pool, there are restrictions on supervision and also on cleanliness standards and the frequency of cleaning of the changing room facilities. And in some cases, they had to levy assessments because they couldn't otherwise afford to pay for it within their budget. So in some cases, depending on the nature of the community, they didn't have the money and they need more money, not less money.
We have one question in the Q&A. Can waivers from individuals as a condition for using the facilities eliminate or minimize the risk to the association?
The answer to that question is generally no. But there are some exceptions. The Florida law does not allow one to exculpate themselves from their own negligence. So if I ask you to come to my house and sign a waiver that you won't sue me, and then I leave things strewn all about the floor and there's roller skates and marbles all over the place, and you fall and you hurt yourself, that waiver is not likely going to protect me. Because it does not excuse me from taking whatever due care the law imposes on me to create a safe environment for people who visit my home. So the same would go for an HOA, that if you have people signing waivers that they won't sue the association if they get sick by using the facilities, it provides a sort of I don't know what to call it. You may think that it makes you feel better, and maybe some people won't sue if they've signed something because they feel that, well, I told them I wouldn't pursue them, so I won't. I signed something. But other than people's voluntary compliance with the waivers that they've signed, the courts will generally not excuse someone from their own negligence. But then we go back to the whole issue is, did you catch it did you get sick at the clubhouse, and how can you prove that the virus that you caught was caught on the association's facilities and not someplace else? So I think that I've had a number of clients who have asked that we prepare those sorts of things, but the caveat that we always provide is that they do not often provide the protection that you hope.
I'll just add, from an insurance standpoint, the insurance companies really don't even encourage or push that you use something like that. As Keith mentioned, it's, in some cases it can be helpful and put the insurance company in a more defensible position, but inevitably, it's almost impossible to guarantee that everybody is signing those waivers, and they're really not worth the time and effort. from an insurance standpoint.
And I believe these would be more of the insurance type questions if you'd like to take these, Brendan.
Does the pandemic suggest that the board should carry more insurance? What would it cover? Well, as we mentioned earlier on, the insurance policies likely would not come into play in terms of providing coverage. So the answer there is, I wouldn't suggest going and carrying higher limits of insurance. It's really not going to be effective. And as I mentioned, that the insurance companies, if it doesn't have an exclusion, it sure will at renewal. They're being pretty much added to every policy we've seen. The next one regarding cyber liability, would it cover the association? Sorry, I've got to move my screen. With websites hosted by website hosting companies. So cyber liability, I would say 10% of our association clients have cyber liability. It's something that we bring up frequently just to make them aware, but it's a relatively new coverage, and the companies that offer it, their coverage forms are all over the place. You really have to dig into what they're covering and the way the forms are written to make sure that it fits the exact need of your association. So it's a difficult process to compare one to another, or to even make sure that you have the right one. It is possible to get coverage that would fit your needs, but a lot of associations at this point still feel that their cyber liability exposure is pretty limited. It really depends on how your association functions in terms of technology. The last one here on this slide is legal defense policy. So there's two companies that offer legal defense policies, and just in general, these policies are coverage for defense for claims that arise that are not covered by your typical association policies, your general liability or your directors and officers liability. There are two companies, as I said. One is Atlantic Mutual, the other is Bold. These policies are something to consider because they do claim to cover virus, that they would cover a suit that comes in that involves a virus. I would make sure that you speak to your agent about exactly what this policy does, because the policy does cover defense only. So it would not cover anything to do with a settlement or a final judgment. So you basically would turn over this case to the insurance company for this legal defense policy, or Bold, and they would handle your defense at their expense, but then you would be responsible to pay the settlement or the final judgment. So there's definitely some things to consider. There's a lot of other costs that go into litigation that are not covered by this policy. So there's a lot to think about in terms of whether that policy makes sense for your community.
Brendan, I know we spoke about this before, and I think there's a couple of other points that may be useful. For those who don't entirely understand the nature of insurance policies, there are sometimes two different elements to it. One is you are protected in terms of attorney's fees, meaning that the insurance company will pay for your defense, so you don't have to pay a lawyer to defend you. The other part of the policy that's important to associations is the part that provides indemnity. And that means that if a judgment is entered against the association, that the insurance company will pay the judgment. So sometimes, in this instance, these policies, these legal defense policies, only provide for the defense side of the policy and don't provide any indemnity. And they also, we've discussed this in some of the, there are different policies with different provisions, so don't hold me to all of them. But many of these policies authorize the insurance company to settle the claim on your behalf, and yet they'll offer money to the people who are suing you, but yet they're not going to pay it. Then you have to pay it. And if a judgment is entered against you, then you still have to pay it. And if the defense that you got wasn't particularly good. Maybe they didn't hire the best lawyer, or maybe the lawyer had a lot of other things going on. Whatever the reason is, if you don't get a good defense, well, now you have a big fat judgment against you because you didn't have your case defended by someone who was able to defend it properly. So it's important to recognize that if you do have one of these legal defense policies, you should keep your general counsel involved in the nature of the proceedings to make sure that you are being protected and you are being defended in the best possible way. You'll save money, of course, because your primary defense will be by the insurance company, but it's worth the extra few dollars to make sure that your own counsel is supervising what's going on, so you don't end up with being sandbagged by someone who just wanted to dump the file, and then you end up with a big judgment against you.
Those are all good points. I just want to just elaborate a little bit on the way that would work. Say that the defense costs were $15,000 and the settlement cost or the judgment was $100,000. This policy would only cover the $15,000, and then you would get a bill for $100,000. Just to make that crystal clear, it's a great point. The other issue is that the policy doesn't cover appeals. So you have no option with that policy to go back and appeal the decision.
So let me start here with the legal issue on this one. This I've seen come up. So in a condominium, in the nature of a condominium is that a condominium unit owner owns the real property that is described as the unit, and that's described in the Declaration of Condominium. And it varies from building to building, but by and large, the area that the individual unit owners own individually is the area that's inside the apartment, and sometimes including a balcony. Almost always, the grassy areas that surround the condominium building are part of the common elements. In some instances, they're not even part of the common elements. Sometimes they are owned by a master association that isn't even a condominium at all. And sometimes the condominium property is limited by the condominium building itself. So these instances where the property that's outside of the unit doesn't belong to the unit owner is often very limiting in what the unit owner is able to put on that property. That property is owned jointly by everybody in the building in that particular condominium, and the individual unit owners don't have a right to bury a tank or put a tank outside their building for their generators, or for that matter, the generator equipment. So for many people who live in condos in particular, the idea of having a generator in most condominiums is not realistic. You could have potentially a portable generator if you live in a condominium that is the style that has a garage, perhaps. You couldn't operate the generator inside the garage. There are carbon monoxide reasons for that. But you could have a portable generator, perhaps, that you would have that operated far enough away from the building to provide you with safety from carbon monoxide poisoning. But for most condominium owners, a generator is not a realistic option. In a homeowners association, you have perhaps a better opportunity to be able to do that, because very often in an HOA, the homeowner will own some of the property outside of the actual residence, and they'll have a place to put it. There may be architectural restrictions in some communities, but unless the architectural restrictions identify with some specificity in their governing documents that generators aren't permitted, or that they need to be installed in a particular way or in a particular place, in some homeowners associations, these will be viable options for people.
This particular question reminds me of one of my favorite claim stories. And since we're coming up on Thanksgiving, it's appropriate. I work with an association where a owner in the building went out to the common area, a nice lawn, and proceeded to dig a hole and fill it with charcoal. And his plan was to cook his Thanksgiving turkey in the middle of this condo association's common area. And he was approached by two of the board members and asked to stop, and an argument pursued. And and he actually tried to file a lawsuit. One of my favorite claim stories. Common area is common area, and as Keith said, there's going to be limited uses. And insurance, in terms of the generator and insurance issues, as long as if you're able to do it per the city codes and your own association, it doesn't really come into play in terms of insurance. Insurance is always going to defer to the code and your association documents.
Since we're on the subject of liability, there is one question. Is it useful for individuals from a community to carry additional insurance premiums to cover unanticipated events at the clubhouse? And I'll let you answer that, Brandon. That it's more of a liability issue but I'll let you take that.
Unanticipated events at the clubhouse. So I get a lot of, if we do this, are we covered questions probably daily. And, the reality is that it's a general liability policy. And my response is it's generally covered unless it's excluded. And if it's excluded, it's probably covered under another policy. And that's the reason it's excluded. There aren't many things that you can do in an association that either limit or eliminate your coverage. So it's hard to answer this because it's pretty vague when you say unanticipated events.
But there's also for an individual's insurance policy, not an association's. Can an individual carry additional insurance to cover unanticipated events?
Okay, thank you, Kevin, for clarifying. Yes, so a lot of people don't realize your homeowner's policy is a package policy. It's not just to cover the home for a hurricane or fire. Your homeowner's policy has personal liability. Now, your standard homeowner's policy starts off with $100,000, and you can buy that for very little money, up to $300,000, which I would encourage everybody to do. A lot of times it's under $30 to go from $100,000 to $300,000 in personal liability. Personal liability is different than premises liability because personal liability goes with you. So you're at Publix and you turn a corner with a shopping cart and you knock somebody over and they break their arm and they decide to sue you, your homeowner's policy would respond to that. So in terms of this question, as long as you have a homeowner's policy, which I would encourage everybody to have, you should have coverage for something that happened at the clubhouse. If you were hosting a birthday party for your child and somebody got hurt, if they sued the association, they sued you personally, your homeowner's policy would likely respond.
Thank you.
Yep.
Unrelated, but Keith, there's a question. Is it possible to switch from a condo to an HOA, and if so, how?
To switch their condo to an HOA?
Yes.
That's one of these yes but no questions. It is impractical, but possible. It would require 100% approval of all unit owners and all mortgage holders and lien holders in order to change a condominium or to terminate it. Well, I take that back. There are instances where you could terminate a condominium with less than 100% approval. But that would be required first, is you would have to first terminate your condominium, which would require certainly nothing less than 80% in most instances, and under the statute 90%. And then there's all kinds of other possibilities of people throwing wrenches into the works to try and prevent it from happening. But if all of the planets aligned correctly, it is possible to terminate a condominium, and then it would have to be converted into something else. And the only way that you could have a homeowners association operate a condominium is if the condominium was of the sort that it's constructed where one unit is not on top of another. If the units are constructed one on top of another, it is not possible to have that as a homeowners association. The only form of ownership that would allow you to have a ownership of an apartment that is stacked on top of another would be a condo, or potentially a cooperative if the cooperative association owns the whole building and then each owner has a right to lease. So it is possible. I'm not sure. There must be something underlying that question for why that individual wants to convert it from a condo to an HOA. They operate in very similar ways. A little bit less regulation for a homeowners association, but they operate so similarly. I'm curious as to why that individual wants to switch from a condo to an HOA.
I have seen instances where townhouse projects, for example, can either be condo or they can be HOAs.
Right. That's right.
Determines who's responsible for roofs and things like that. So,
well, in those instances, Kevin, where you have a townhouse, the units are not on top of each other; they are side by side.
correct.
They have what are known as party wall agreements, where there are either in the declaration or elsewhere, there are agreements where it describes the obligations of the parties with relation to the shared wall. So you can't have a homeowners association without a condo if the units are next to each other in that manner. Or I have a condo client where there's single family homes. The common elements are only grassy areas in a clubhouse. The buildings themselves are all single family homes, but they were built as a condominium for some reason. A long time ago, there was, developers and developer lawyers didn't understand entirely the distinctions among the various forms of ownership, and sometimes you had an aberration like the one I just described. But in that instance, they could probably more easily convert to a homeowners association if they wanted to, because they don't have any shared facilities. But it still requires an enormous, you'd have to terminate the condominium first.
I just wanted to throw one other thing in there about insurance. From an insurance perspective, it is much easier to insure, not cheaper, easier to insure a condo association, because statute 718.111 section 3F is very detailed in regards to who insures what part of the building, meaning the association insures this and the unit owners insure that, and there's no overlap. When it comes to statute 720 with the HOA, you have to read every single individual HOA's documents to determine how the insurance is handled. Sometimes the association insures only the exterior walls and the roof, and the unit owner insures everything inside. Sometimes the HOA insures the whole building, including the build out on the inside and everything in between. So it's much more difficult. So I've over the years, I've worked with many HOAs that have actually changed their documents to look and feel more similar to a condo association in terms of how they handle insurance. They didn't change from an HOA to a condo. They merely changed the section in their documents that address insurance.
Yeah, that's an excellent point, Brendan. And to Kevin's point about the roofs, that is very often the impetus for making those changes to the documents. You'll have a homeowners association where each individual lot owner is responsible for his own roof, but yet when you visually look at the building from the outside, it looks like one continuous roof. And very often what you have is a leak that will come in one area of the roof, and the water will make its way into an apartment that's several apartments down. So now the question becomes, well, who's responsible for repairing that? The leak is actually coming from Unit A, but it isn't affecting Unit A. The water is traveling, as water will do, into Unit D. So it often creates a controversy. So I've had communities where they've amended their HOA governing documents to provide that the association has the obligation to maintain the roofs, simply because it makes practical sense to do so. And the same for the insurance, where they've if the building burns down, or if you have one unit that burns and the others get a more minor damage, it still sometimes makes more sense for the association to take on the obligation of repairing that building and bringing it back to its original condition.
So the next question up, what are insurance carriers estimating for premium increases for association insurance policies? And then, and what for homeowners and condo owners, unit owners policies? So right now, in my 21 years, this is the most difficult market I've seen. Property insurance is increasing significantly. What's unusual about this market is that the general liability market is also difficult, and then the directors and officers liability is also difficult. So we're in a situation where the top three policies in terms of the policies you carry in terms of premium size most likely are going up in some cases pretty dramatically. I would say for older associations, you're looking at probably 15 to 30% on the property. And on the liability, you're looking at anywhere from probably 10 to 25%. And the same on the directors and officers liability, 10 to 25%. Homeowners policies are also going up significantly, and I would say those are 10 to 40%. There's a lot of variables. The reason I'm giving such a big range is there's huge variables there. The age, how claims history, there's a lot of things that can drive that cost. So right now it's just a very difficult market. And, we had a period of time where the premiums came down significantly over about a 5-year period. And they started to increase pretty dramatically last year. And it looks like it's going to continue for this year and probably into next year.
So Brandon, I'm going to assume that if the homeowner policies are going up, then most likely the umbrella liability policies for homeowners will probably go up. And what about flood?
So flood is a federal program. So the increases there are literally an act of Congress to get to increase those premiums. But in general, flood premiums are going up, but it's more modest. It's anywhere from say 4 to 12%. We're not seeing the big increases we saw in flood probably about 3 or 4 years ago, where the premiums were going up 20 and 25%.
Thank you. One question, do you suggest all HOA members increase their loss assessment coverage from the standard 1,000 to say 5,000 if available by their HO3 carrier?
So the state of Florida by law requires every homeowner's insurance company to offer at a minimum $2,000 in loss assessment. So your policy should have 2,000, not 1,000. And in addition, that particular item must be subject to no more than a $250 deductible. So you should have $2,000 minimum with a deductible of $250 or less. And absolutely, I would increase that because your association has a huge hurricane deductible. Just by virtue of being in South Florida or Florida in general, your hurricane deductible for your association is huge. If you sustain damage in your community, you will most likely receive an assessment for that damage just to cover the deductible. That deductible assessment can be covered by your homeowners by the loss assessment. So absolutely buy as much as you can. And that goes for also buy as much mold coverage as you can, and also increase your liability as much as you can. These are items that cost almost nothing, $30, $40 a year to increase your mold from say 10 or 15,000 to 25 or 50,000.
And somebody living in a homeowners association may say, well, we don't have a clubhouse. We don't have anything fancy as far as our common area. So why do we need to worry about this type of issue? And I know we've experienced and seen some issues where, if nothing more, most carriers for an association, an HOA, do not insure landscaping. And as a result, a major hurricane comes through and wipes out all the landscaping. And if you have some pretty nice palm trees there, they're probably anywhere from $5,000 to $10,000 a piece. Pretty soon you've built up a bill that is not covered by insurance. So I think that's the reason why you need to look very carefully at a homeowners association's potential losses through a loss assessment coverage.
So I just want to clarify one thing, because from time to time we do have storms that come through, and they're not significant in terms of causing structural damage, but they do cause a lot of trees and landscaping damage. an assessment just for the purpose of cutting trees and removing trees and cleaning up is likely not covered by your homeowners under the loss assessment. But if there is any structural damage, or if the trees are covered by your association's insurance, some association policies do cover some outdoor trees and landscaping, then the assessment could be covered. But when we had Hurricane Irma in our area in Palm Beach County, didn't do a lot of structural damage, but there was a tremendous amount of landscaping damage. The loss assessment under your homeowner's policy is triggered by an insured event. So if the landscaping wasn't insured, then the homeowner's policy will likely not pay loss assessment.
And one other question relating to a condominium. Damage to a unit occurred due to contractor negligence during roof replacement. Contractor acknowledged liability, paid for half of the repairs to the unit, but not the second half. Contractor work scope is complete and contractor wants final payment. Unit owner is demanding final payment by association be held until unit owner is complete. Would that be appropriate?
Well, it's something that should be considered for sure. I don't, the association, this, generally speaking, the association has some exposure to that unit owner potentially too. The roofer was acting as the association's agent and doing work on its property. So the association should work with the unit owner to get the owner paid what he's entitled to be paid. This might be an issue of where the unit owner believes he's entitled to be paid something that he's not. I can't really speak to the facts of the issue, but certainly the association should be working with the owner.
Thank you, Keith.
For those of you that can see this slide here, it probably does a better job explaining why the market is difficult than what I mentioned. In 2019, there were $14 billion disasters in the U.S. These are the wildfires, all the hurricanes, snowstorms, flooding, everything that happened in 2019. The worst year on record. And of course, this year so far, we've had a number of additional natural disasters, making it 2 years back to back with serious natural disasters, driving a lot of the cost in these increases that I mentioned before. Here are some of the headlines that I've pulled out over the last 6 months or so. For those that aren't able to see, I'll just read a couple. One from AM Best: Florida insurers brace for challenging June reinsurance renewals. Reinsurance is insurance that insurance companies buy. After they take your premium, they take that premium, they go out and they buy reinsurance to spread the risk. Another column said a tidal wave of higher property insurance rates is about to hit Florida. Another one, property insurance market hardening set to continue. Some premiums set to double as hard market moves in. Reduced capacity boosts reinsurance pricing at U.S. Renewals. Brace yourself for double-digit reinsurance rate hikes. And then finally, Swiss Re points to yet more insurance market hardening. These are just a sample of articles that I see in various literature that I read every day, pointing to that this is a very difficult market, and it doesn't look like it's going to change anytime soon.
All right, a couple other questions. If a hurricane causes a tree to uproot, causing major structural damage, causing total destruction, who is responsible for repairs and who is responsible for paying the housing costs until the unit is relivable?
Was this a condo or a HOA? Do we have any clarification?
We do not know.
So if this was a homeowners association and it was your tree on your property, then it's your problem. If the tree belonged to the association and it's on common property of the association, there is some possibility that if it was not properly trimmed, if there was something about the tree that the association was aware of or should have been aware of that made it more likely to fall over, then there could be some liability of the association. But if it was just that a hurricane came along and knocked a tree down that was otherwise properly maintained, that doesn't mean that there's necessarily anyone who's going to be responsible for those damages, and the homeowner could be on their own. In order for an association to be responsible for damages to a homeowner's property, the homeowner would need to prove that the association was somehow negligent. It isn't negligence simply to have trees on your property, obviously, because we have trees everywhere in Florida. And the nature of hurricanes, we live in a hurricane-prone area, and hurricanes knock trees over. So the fact that a tree fell over in a hurricane doesn't necessarily mean that someone was negligent. But it's possible if the tree wasn't properly maintained, if it was a dead tree that had been there for a long time and the association didn't do anything about it, those are some variables that could expose an association to liability. In a condo, a similar situation, but in the condo, it may be more likely that the damage caused to your unit is an insurable event that will be covered by the association's master policy. And hopefully the homeowners in a condo, this is a point that I'd like to make, is that in the condo, some people believe that you don't need to have insurance, that individual condominium unit owners don't need insurance because the condominium has it. Well, the reality is that the condominium's insurance policy covers rebuilding your condominium unit generally, but it doesn't cover the contents of your condominium unit. It doesn't cover your furniture. It doesn't cover your floor coverings, your kitchen cabinets, your lighting fixtures, your appliances, and many other things that go into what makes your condominium unit your home. The association insurance will not cover. So while the Condominium Act used to provide specific requirements for unit owners to buy their own insurance for those things not insured by the association, there have been some changes to the Act over the years that have led people to conclude that the Act no longer requires it. And they may be right. The language of the statute retains some vestiges of when it was required, and it's created confusion about whether it is required or not. But it is certainly recommended, and some associations have amended their governing documents to mandate that individual unit owners purchase insurance, simply because a unit that doesn't have insurance can cause property value, can affect the property values of the other units, because you'll have a unit that's just gutted and is perhaps sold on a market that doesn't have appliances, doesn't have kitchen cabinets or floor coverings and what have you. So my point is simply, do not rely on the association's insurance alone. Be sure to have your own condominium insurance policy.
I want to echo that what Keith said is absolutely true. I'm dealing with a claim right now on a high-rise condo downtown West Palm. Fire sprinkler line ruptured, and there's 60 units damaged, 60. Unfortunately, there's a number of them that have unit owners that don't have an HO6 policy. All of that damage within their unit, or the majority, is going to be covered by them personally. And we could be talking about $25,000, $50,000. So in regards to the tree on a building, it looks like somebody clarified that it's a condo.
Yeah, I saw that.
The way that I've seen the policy respond for that type of situation is that the condo association's policy would remove the tree, and obviously the damaged roof and exterior walls would be the association's policy. But the penetration to the roof, if it allowed water or damage to come into the unit, there's, as Keith said, there's certain items within that unit that are absolutely your responsibility to cover. And again, that's the reason you need to have what's called an HO6 unit owner's policy, because that's going to help you recover from that damage. But it also has a line item in the policy that covers loss of use. If you have to go rent an apartment or stay at a hotel while they're fixing your unit, there's coverage within your homeowner's policy, as long as you have a homeowner's policy. As I mentioned before, these policies are package policies. They're not just covering one thing or another. They cover several different, like we talked about the loss assessment, the personal liability, the loss of use. Those are all covered under your homeowners.
Okay, a couple of miscellaneous legal questions, Keith. Does statutory of Florida condominium law require HOAs to allow open, regular, or special board meetings?
Yes. That's easy. Yeah, the Homeowners Association Act provides that anytime that a quorum of the board of directors gathers to discuss association business, a meeting is deemed to have taken place, and that meeting needs to be noticed to the owners 48 hours in advance. If the board is going to have a meeting that's going to concern adopting rules concerning lot use or the potential levy of a special assessment, then the notice has to be mailed to all unit owners 14 days in advance and posted. There are exceptions if the board is meeting with its attorney or about potentially attorney-client privilege matters, and there are also exceptions if they're talking about personnel matters. But generally speaking, the answer is yes. Board meetings are required to be open to all owners in an HOA. Same for Congress.
Thank you, Keith. The other question is, how does an HOA protect liens against a property that is being foreclosed by a mortgage holder?
Well, if I understand the question correctly, there's an association lien for non-payment of assessments that is junior to the mortgage that's being foreclosed. And I'm going to assume that in this question, for purposes of this question, that the mortgage that's being foreclosed is a first mortgage that was recorded prior to the recording of the claim of lien. If that is the case, then there isn't any way to protect the association's lien short of the association paying off the first mortgage, which is usually something an association does not want to do. So the association's lien is subordinate to the first mortgage. It will become extinguished by the first mortgage foreclosure, and then the person or the entity that buys that unit at a foreclosure sale is potentially liable to the association for up to 12 months of assessments, or 1% of the original mortgage amount if it's an HOA. So the association may recover some of its money. The homeowner, of course, continues to owe the association that money, even if he loses his house in foreclosure. However, the reality is that most people who lose their homes in foreclosure don't have significant assets to justify the association pursuing the homeowner for, say, a money judgment. Not always, sometimes they do, but it's very often that if people lose their home in foreclosure, they're not in a financial position to pay the assessments, and it's not usually worth it.
And now if there was a, excuse me, a very small first mortgage balance that was first in line, then the association lien, and then a homeowner went out and got a secured line of credit, an equity line against the property as a second mortgage, then that would be a different ballgame, would it not?
It would be different because the association's claim of lien is superior to, in most cases. There are some instances where some governing documents of some older HOAs don't have very good language in terms of protecting the association's liens. But generally speaking, the association's lien is superior to all liens except for a first mortgage of record. So if there is a second mortgage or a home equity line of credit, chances are the association's lien is superior to that. So if it is a second mortgage holder that's foreclosing, the association's lien is protected because it is superior in most cases to that lien.
Okay, and the last couple legal things I think we have a time for is, do board members have the same sunshine requirements as local governments? Specifically, can they discuss how they will vote with each other outside of a publicly noticed meeting?
Yeah, yes, they may. This is similar to the question I was just asked. There is nothing that prevents a director from talking to another director outside of the board meeting. And there's nothing to prevent directors from communicating with each other outside of the board meeting via email. And so it is very common for directors to already kind of know what they plan to do once they get to the meeting. They can't vote by email or make decisions by email, but they certainly can communicate with each other via email and or telephone. But if ultimately the meeting has to be noticed to the members and the decisions have to be made publicly at the meetings.
Okay, and what is the difference between a POA and an HOA legally?
Nothing. It really is. They mostly
Both
serve,
governed by statute 720,
yes.
treated the
In
same.
most cases, you know, yeah. I mean, whether something is governed by 720 or not depends on whether it's a residential community or not. But in terms of their actual function, there isn't any distinction between a homeowners association and a property owners association. It's really a matter of terminology.
Correct.
They function in the same way.
And managed the same way. All right, that's, I think, all the questions that I have on my thing. If anybody else has any.
There was one that was, how does an HOA protect liens against a property that is being foreclosed? Oh,
Yeah,
sorry.
that was discussed.
Well, thank you so much for joining us, all of our attendees as well. And we will be sending out a recording of this with the slides to anyone who's registered. And thank you to our panelists and to Kevin Carroll for hosting this today. Everyone have a great day.
Bye. Thank you, everybody. Have a wonderful day.
Thank you. Have a great day.
I know.